Tonight's session is about multiple orders. If you've ever participated in Forex or anything similar to Forex before, this is going to be a grade 1 class for you. For those of you who've never done Forex or any cryptocurrency trading, I'm not saying you've not bought into cryptocurrency. I'm just saying you've not traded with cryptocurrency. I've got lots of hope for you because it's going to be easy for me to explain to you. So the more clever you are at Forex, the harder it is for me to explain, because what the concept of Forex is, let's just make this full screen, take our little volume away, cramp that a little bit. You go into the market now, and based on your little indicators, you now make decisions on whether this market is going to go up or down. You put all the lines on, you put all the support and resistance lines on, and you see certain things happening. And there's one of two things that can happen. The price can go down or it can go up. If it goes up, the next high is percentage-wise for almost 5% higher, or the next low could be for almost 5% lower. And this is one of the most difficult things for traders because they want to be biased. If you want to find the biased people in the world, you must become a politician or believe in a political system, because that means you believe in this and not in that, or you believe in that and not in this. You have a way of perceiving life only your way. And that is unfortunately the life that lots of people live today. We are persuaded by news and events. And we were talking this afternoon, some young people that have done some homework on political science said 50 or 100 years ago, people read the newspaper and they believed what they saw. And they actually got their lives were run by the news. Today we can question everything. And the questioning things gives us possibilities. So when we get to tonight's subject, it's about, if I believe that the market could go up and I have no stock, I will have to buy at the current price. I buy 100 rands or 1,000 rand at the current price. Let's say I buy 1,000 rand at the current price. I believe the market's going to go up, and I say the current price, the market will go up almost 5%. Let's say it goes up 5%. If I bought 1,000 rands worth of stock and it goes up 5%, how much do I have if I sell at 5% higher? It's 5,000 rand plus 5%, which means I make 50 rand on that trade. That's a one single trade system. It's not a multiple trade, it's a single trade system. Or if I believe that the market would drop 5%, then I'll rather buy 5% lower. I'm the bargain guy. I like to buy at bargain price. But let's say the price only just tonight it goes boom, 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 up to 2.089, then I make 5% more on the price I bought at the current price. But if I went and placed one trade down here and bought no stock at the current price, and the price went up, what happened about this buy order here? Nothing. You still got the same amount of funds in your account, and you are welcome to cancel that order anytime. You're welcome to cancel that order anytime because you see, okay, the market went in the opposite direction. That is biased. If I think the market's going to go up and I buy at the current price and I let it go, but let's say, for instance, I bought at the current price and the market goes down. What happens then? It means I bought, and that which I bought is now worth 5% less than what I bought it for. That's still being biased because that means I'm believing and expecting the market to go as I or my master trader or whoever has told me. These free signals that people get. No, people get too many free signals. A free signal is worth what you pay for it. If you pay nothing for it, it's worth nothing. People that are giving real signals are the ones who are doing their homework and understand the markets. All right, so you say to me, okay, but what if it goes down? If I say it's going to go down and and it goes up, or I think it's going to go down. Sorry, if I think it's going to go up and it goes down, what then? That's where the problem with politics comes because you're thinking political. You don't want to be a political. Because political is so strong about their belief that something would happen the way they think it would happen, they actually miss out on life and enjoyment of trades. So let's say, for instance, I'm unsure. I've got 10,000 Rand that I want to trade with. But I say the market's going to go up and it's going to go down. How's that for a new view of life? Life is about going up and down. It's an old story I've shared with many of my traders over the years. Life is about up and down. You must just know how high and how low. And you must know what your strategy is. I don't want to buy when the price is only at its lowest. If the price goes up, I also want to sell some. So I'm going to split my money into 1,000 Rand pieces or 50-50. So I'm going to take 5,000 Rand. I believe it could go up, it could go down, but let's gamble with two directions. Let's go 5,000 Rand in that current price. Let's take 5,000 and we buy in at the current price. And then what we can do is we can place an order every 1% higher. So I take 1,000 Rands worth and I sell at 1%, 2%, 3%, 4%, 5%. Now I haven't measured them out in percentages. I'm just giving an example. So at 1%, I'm going to sell the first 1,000 Rands worth of Bitcoin. At 2%, I'm going to sell the second 1,000 Rands worth. But every one that I've split, I'm making a slightly more because I'm making 1%. In other words, I'm taking 1,000 rands worth of Bitcoin and selling it there. 1% at 1,000 rand is 10 rand. The second 1,000 rand is 20 rand. The next 1,000 rand is 30 rand. The next 1,000, 40 rand. The next 1,000 is 50 rand. So if I tell 10, 20, 30, 40, 50, 10, 30, 70, 130, and oh, well, I need to do the sums. So my 5,000 rand is giving me 5,150, 5,200 rand back. But the other 5,000 rand, I want to place orders down. If the price falls 1%, 2%, 3%, 4%, 5%, I want to buy lower prices. So this is what we call multiple trades. I'm giving you a general spectrum of how you could trade, because trading like this means you could stand up, go on holiday for the weekend, come back, and several of these orders would have gone through. Some of your sell orders, some of your buy orders, maybe only your buy orders, maybe only your sell orders. The next question that the trader will ask, yeah, but what about these that didn't go through? They just sitting there. They just sitting there. That's okay. You didn't gamble. You split your risk. If you've got a shop, one shop, that shop only makes money while you're there. But if you've got a shop that's multiple shops, shops all over town, in quiet places, busy places, and all you need to do is to go at the end of the day and collect the cash, give them a cash flow for the next morning. Then you're having your money work for you, because you don't have to be present at the one order, the one trade that you were at. Because not all your shops are going to make you money every single day. And it doesn't matter what you think about Bitcoin. And I'm using Bitcoin as the best example over here. Bitcoin doesn't make such big profits like the penny stocks, but Bitcoin is going to be the most reliable stock to trade in the next 5 to 10 to 15 years. You're going to regret not having some Bitcoin, whether it's 500 Rand, 5,000 or 50,000 Rand Bitcoin. Because if you bought 5,000 Rands of Bitcoin now, and you just left it, you didn't need to worry about that 5,000 Rand will pay probably a university education for a child in 5 years. I'm making a wild statement, but I think I'm pretty spot on what I'm saying now. So what I'm teaching you now in multiple trades is a short-term trader strategy. I've just showed you how short-term trading works, how we teach our traders short-term. When you go and learn to trade from any Forex stock market trader, they say, oh, you must go there, or you must short the market, go there. No, because it takes time for anything to go there or there. So what could I do to keep my shop open? How can I keep my shop open? Let's use some practical example. I'm going to go to Dogecoin as a simple day-to-day currency on indicators, on what market trends would have done. Now I'm using now one day graph. One day graph is only for somebody that's medium long term. And if you're a short-term trader, you're trading from day to day, you always still want to open the graph on a one-day graph and see where has this been going all along. You've been using your support resistance lines, your Fibonacci's, all of that. But where has this been going? And where could it be going next? So let's say we are, let me see what this date is. Move that away. We are sitting in June 2023. Now we see, okay, but it's been going down. Support line is there. Resistance line is there. There's another resistance line. Now it's going into a pinch. And we know what happens when it goes into a pinch. So we move this forward. Oops, it's not helping. And so the days pass. It touches, breaks through below the support line. And what we do as traders, we will always think that if this price breaks out of this descending wedge, then it needs to go up again at least to there, 1 Rand 47, 175, and 187. This will help me with my multiple trade system. So if I'm a long-term trader, or medium-term trader, I want to go on holiday. I don't want to watch the markets every single day. I just want to find where all the resistance lines, where can these prices go to? So I start doing this. And all of these sell order prices, that's where I place my multiple orders. In other words, I'm not just going to sell 5,000 rands worth of Dogecoin over there and make 60%, which is not a bad return. I want to at least trade in between also, in case it goes down and up and down, because everything keeps going up and down. If somebody asks, what's the market's going to do? I'll always say up and down. Your parents knew exactly what up and down was. They went red in the face. But then you came out. That is the law of nature. When two atoms get together, they create energy, and this is what happens with all of the markets. So now this market has hit the bottom. You've drawn your resistance lines going up. And of course, now your first seller order is starting to go through. After we started, what was the 14th of June, 1 week later, we made some profit on this because our first sell order went through. But we got a sell order there, got a sell order there, there, and there. So we got money now at 1 Rand 30 in our wallets to use somewhere else. We can go and buy something else. That's one thing about a shopkeeper. The shopkeeper is always recycling their money. They're always turning their money, moving it to a different location, to a different trade, something that's new. There's seasonal coins, like you have anybody that's in business for themselves, especially in the fruit and veg business, that certain fruit and veg are only in season certain times of the year. So that means certain time of the year before everyone else buys it, you must get it at a good price. And if the season lasts longer, so for instance, Avos, come into the season between 4 and 6 rand an hour. But when they're out of season, you buy them the end of the season, then you keep them for another 2 weeks. You can sell them at 15 rand to 20 rand an hour. This, I'm teaching you what farmers teach. You must know the season and the time. So now your price went up. Your first sell order's gone through. Let's make this full screen. And I'm going into the past to show you how the history of the future happens. That makes sense. So we've hit the resistance line. Our sell order went through. It is a resistance line. It has to come down again. It bounces that you can buy some more where you bought it the first place, there, and you bought back. So you bought at 1 Rand 17, sold at 1 Rand 28, made 10%. So if you had 5,000 Rand, made 10%, that's 500 Rand. And then when it fell back to 1 Rand 16, you took the 5,500 Rand and bought back at 1 Rand 18. And now you've got more stock. Now it's broken through and it's sold again. Remember, you've still got some more orders up there. So you're waiting for the time that goes there. The fact that the thing that traders miss often is because they thought that the market's only going to go there. And then what happens? It goes there and it drops again. When it drops again, they sell that which they bought there, and then they forget. So the idea is, how can I place multiple trades to maximize? Okay, now it's broken the resistance. It's trying to get above. It comes down again. Then it struggles and it struggles and it struggles. Then finally it breaks through and it comes down and boom, it goes through your second and your third order. But after it's gone through those orders, it goes back to the previous one. So you buy more back at 1 Rand 47. And you're going to place another order at 1 Rand 55, 1 Rand 54. Because you're going to make a profit on multiple trades. Multiple trades means multiple profits, especially for those who spend 2 hours a day, 1 to 2 hours a day in the markets. You can do this. So let it drum. Okay, the resistance couldn't handle it. It's going to try again. You might want to place a buy order down here in case it comes down to this support line, and boom, it goes all the way down to our first support line. Look at that. Now you bought Dogecoin on special. Because you sold there, now you're still panicking about these 2 orders because they haven't gone through yet. No worries. This stock doesn't go fraught. It doesn't get old. It doesn't get mold on. It's the same stock. It stays fresh because it's on the internet. So you just buy back in again, place your order there, place another 2 orders there. You should have had orders up there in the first place. Goes down, trying to get back up, then you buy back again. So you sold what you sold there, you buy and back there. So you have now bought back 1, 2, 3 places already. Is dit nie mooi nie? So now we hopefully it's going to go above our support line. Boom, bounces up, down, boom. It's struggling to get above the support line. But then slightly in October, boom, our first sell order goes through. When the sell order goes through, I'm placing orders back here again in case It does that again. I doubt it. The time of the year, I doubt it. But let's try. Then okay, now we've got these 1, 2, 3, 4, 5 sell orders, struggling, struggling, struggling. Boom! There it hits the first and second. You can see the candles went right through there, came down, didn't even hit the support line, broke through there and back up again, the time of the year, and all of our sell orders are gone through. Multiple sell orders. Remember, we can be putting a Fibonacci on here. We can be putting tools on here. That's not tonight's purpose of tonight's call. The purpose of tonight's call is to show you how multiple orders can work for you. Based on the past, you can project into the future. Now, all our sell orders are gone through. And you say, well, I need to get out here because all my orders are through. I need to go and buy some cheap stocks again because I'm not going to buy any Dogecoin at R1.90. But you're becoming biased again. You're becoming full of yourself. You're just not understanding that you just need to go and be buying back in those places where you bought back previously. So there it's bouncing up and down, bouncing, buying, buying, buying. Boom, we're back to the two places where we had buy orders. It took like days to get to, sometimes a week to get there, but you had your orders in. You had your lines on the screen. So now we're struggling between these two support lines. Can it go higher? What did 2024 do? Bouncing up and down, up and down, up and down between these two lines, these two lines. How much percentage are you making trading between these two lines? 3%. So up 3%, down 3%, up 3%, down 3%. Good kind of profits. Oh, we're getting back. Boom, our next order gone through at our previous high. Look at this. I have to actually compress this. Elon Musk makes some announcement. It's penny stock season. And there, from the bottom to the top there, traders have made over 200%. That's not all, folks. You need to start placing new orders because you're out of this range. It's finished with this range. Now we need to go higher and higher and higher. Or we need to start placing support and resistance lines on the screen, working out our new highs and our new lows. So there's a new low. There's a new low. Anytime when the market struggles to go higher or go lower at multiple places, those are your support and resistance lines. You can draw lots of them. So from there on, we finish with these lines. These lines we probably won't see again. They won't come back. Won't be a reality. We're done with the past. Now we're going to work on these. Let's draw some more in. See if there's any others want to. Let's use these ones. Let's see how this thing pans out. So you see now we're bouncing between so let's put the 1, 2, 3, 4, 5. I'm showing you how a medium-term trader trades. You can do this on short-term trades. So So where's this going to go? It's between these two support and resistance lines that we've drawn in the past. We've got multiple orders. We've got buy order, buy order, buy order, sell order, sell order, sell order, sell order. That's how it works. If it's price is lower than what it is, you want to split your money. You want to say, if it falls, I want to buy lower. If it goes higher, I want to sell higher. Multiple orders. Let's see how this went. Buy, 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 buy. Went even lower. Sell, buy, sell, buy. Went even lower. You went very clever. You wanted to go and buy somewhere on this line, because this was one of the support lines. Sell. Maybe you didn't buy there, maybe you did. Sell, sell, buy, sell. Well, what's popping up now? Let's sell, buy, sell, 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 sell. There it went ballistic. Look at this. We're totally out of our trading range now. People say cryptos don't work. People don't make money. People don't make money that don't trade crypto. They give their money to other people. They came all the way down again into our trading range. Look there. Look there. Buy and sell, buy and sell. You can do this on a 30-minute graph. You can do this on a one-day graph, any graph like that. Hopefully this all is exciting enough. Let's see the question. Willie, when you use this buy method you showed now and decide to buy at the current price, shouldn't you first check at least if the RSI value is about 40 or lower? That is definitely what you would do on a short-term trade. On a medium long-term trade, I'm actually sitting back on, let me see where the date is, 2025 May. I can now see what's going to happen in the future just by my lines that have been drawn. You can see there that we are in a good place to buy because the market has gone down to 2.30 Rand and up to 8.70 Rand. I would not do this with the Bitcoin graph because the Bitcoin graph is virtually at its highest. So I would be checking the RSI on the Bitcoin graph. Good question. Bye for now. Hope you've all learned something. There's no simple formula to this. It's a bit of experience and a lot of trading, and trade with what you're comfortable to trade with. Great, folks.